It's going okay. It's going okay. It's going very, very well. Can you guys hear me clearly? Let me see. Can you guys hear me clearly? Oh, yeah, that sounds very good. Sounds very good. Yo. How is it going? It's going very, very okay. It's going very, very well for me. How about you? How is it going for you? So, guys, quickly for those who trade synthetic, just so I get you in line with what I'm doing. I'm currently in this trade on V751X in a buy. I entered at this level, and I'm looking to ride this trade all the way to this top. All right. So, so if you want to join in, I'm currently on this trade. If you want to join in, if you want to be part of the trade, I'm currently on this trade. But I think if you would like to get involved in this one, you will have to wait for a pullback after this break above this level. I presently am in this trade. On my phone here, you can see. I don't know if this is going to be clean. Actually, let me turn on my lights. So let's see. Oh, that's bright. So I'm currently in this trade on B75, and I'd say let's. Ayo, what's up, man? What's going on? What's going on? Kalangas, you guys are welcome. Everyone, all of you, you guys are welcome. Welcome to this live trading section. And also today we're going to be doing a top-down analysis on various pairs. So yeah, stick around. The live is not eligible. I don't start, Abby. I don't start. TikTok. I don't know why on they form like this. Every now and then. Dude, well done. Thank you, bro. Thank you, thank you, thank you. What's good, man? What's going on? What's going on? What do you think about gold? Okay, so we're going to be checking our top-down analysis today. So we'll see what we think. But for now, all I think is just all I said before we went offline the other day. So we had our analysis on gold already. Let me switch to gold. All right, so gold, actually not like an analysis. I'm just waiting for gold to come back here now. The other day we thought that it has changed character and it probably would have gone down from here. But then the news came out and it just validated all the analysis that we had. all right, on that day. So since it is still very much in an uptrend, we're just going to wait for it to pull back into this zone and take these guys out. All right, so we're just going to wait for it to pull back when the market opens. We're going to wait for it to pull back into this zone for a continuation, because right now that's the only thing that looks valid. All right, that is the only thing that looks valid. We should have taken a sell here if the market was still within this range, because it was consolidating upwards. So I was expecting a sell from here, but then we gave out the signal. I gave out the signal, but the news came out and the news was against the dollar. All right, so gold skyrocketed, and I didn't take this trade actually, but I also didn't tell anybody to remove the limits that was set, so I just count that as a lot, as a loss. But for me, my trade didn't trigger, maybe because it was during the news, and I just felt like it won't trigger my trades or something. So that is the only way I was able to escape this loss. Another trade I took on that Friday was EJ, and I think that one was a sell, and this was a sell also, which we somehow decided to put our stop loss here when actually it would have been the top. So again, another loss on our end. So Friday was not really a good Friday was not really a good week. Oh, sorry, a good day for us trading. So, but we're not just going to let that be a reason to give up, right? So we are going to be doing our top-down analysis again today on gold, and then we can decide what to do tomorrow. But I don't think anything is going to change that much. I think it's still going to remain the same, because all I'm looking for is a pullback into this protected low now, since it has been able to break structure to the upside. So we're going to look for a pullback into this protected low and hope to see a change of character and then buy back up. Meanwhile, let me see. I am currently in this trade on B75 on X. It's a buy, and the reason for this buy, so that you guys can fall in line. The reason for this buy came from the 15-minute time frame, where you will see that from here you have a break of structure to the upside, all right, and this is the low that caused the break of structure. So ideally, you would expect that this place will be respected. Yes, and it got respected the first time. All right, and what you get is, though this looks like a break of structure internally, it still respected this high and came down. All right, so I expected that this market is going to break and go all the way to this one, but for now, when it came to that low, when it got to that low here, remember it also created some liquidity internally here. So I used this liquidity point here, or this last reaction here, or what you would call an order block, and then it reacted to that other block and also did a change of character, if you guys can see. So there is a change of character here, and that is the motivation for this trade actually. So when there is a change of character, of course, even though the market is going to continue going downward, it should at least push up towards this liquidity before continuing downward. Right now I am on like 1 to 2 on my phone. I'm not sure if you guys can see, but I'm currently up on a trade. Let me see. So I'm currently up on a trade. All right, so I'm just holding it for now, and if there is any re-entry opportunity, I will let you guys know. That is for those who are interested in trading synthetic. All right, for those who don't know, this is volatility index 75, and I trade this on weekend, sometimes on the weekdays, most times on the weekdays too. Like I trade them anytime that I see a setup, basically. But we give it more attention on the weekends, because obviously the forex market is not active in the weekends, right? So we just go with the synthetic indices. But for today, once the head count goes up and once we get like 5k likes and there are more people in the telegram sorry, in the live section, we're going to be doing a top-down analysis on all our pairs, gold inclusive, BTC, Ethereum, and all that. Now, if you were on live yesterday, you guys remember that I said that there are two things that could happen here: that this market is going to consolidate all the way to this area and then drop. And this was yesterday's analysis. I've not even touched it yet. It should be the same on BTC also. Actually, this is BTC, but if you check Ethereum, it should be looking the same. All right. So this is the Ethereum analysis, and you guys know that Ethereum and BTC are correlating pairs. So they actually act the same way. So I'm not surprised to be seeing the same type of analysis playing out on both of them. And it's so unfortunate that I did not give out this trade as a signal, simply because, I mean, even if I'm going to be taking a sell, I wouldn't be looking for a sell just above this consolidation, right? I will be looking for a sell from some more reasonable, high or low or something. But it doesn't take away from the fact that this did a break of structure, and these ones could be used as liquidity, and that is why you are seeing this reaction that you are seeing right now. So if this was used as liquidity, it means it will mitigate this liquidity point and then drop down. So that is kind of like what I expected, but you know, I wasn't just ready to take the trade. Same thing for BTC. You guys can see it is literally like the same analysis, right? So this is where I expect a good buy to come from. All right, but remember, it just took out liquidity. All right, so it could decide to keep going from here, but I wasn't just really like convinced with what the market is doing around there. I wasn't convinced with how the market was moving, so I just decided not to. All right, I decided not to take the sell. If I would have taken it, it would have been a very, very nice one. You can see how well the market is doing right now. It is pushing down quite well, but yeah, I'm not in that trade. I'm waiting for this one, which might be a mistake on my end, but we'll see. All right, by the way, this is the 15-minute time frame, so it's not like a lower time frame. It takes time to play out, but I think this is going to be a very good trade. But regardless, since I'm not yet in this trade, I'll use this as like a confirmation. Once the market goes below this area, that will tell me that there's a change of character on BTC, and then I'll be looking to take a sell from somewhere inside this liquidity standpoint. All right, what's going on? So if it does break that structure to the downside, and this is what I'm talking about, hold on, so let me delete this. So if there is a break of this structure, which is the protected internal low, if there is a break of that internal structure, I will expect a pullback above the liquidity and then a drop towards that my POI for a buy. So if there is a change of character here, then I am definitely going to be joining in on the sell. But the thing is, I didn't get in on the premium level, so I'll definitely need to wait for like a change of character and all that. And while we are on that, let's not forget that we have a trade running, so I'm just going to be looking into it from time to time. So this is my first TP on this trade. This is what I'm looking at as first TP. So how about you guys? What are you all doing? This is what I'm doing currently, and let's see. How about you guys? What's going on? All right, so I'll take out some of this. You're welcome. You guys are welcome. Everyone, you're welcome. Welcome to the live trading section. I'm on UJSL, but now God go help me. What's going on with UJSL? Hold on, let me check. UJ USDJPY. What's going on with UJ? Let's go. Nice, 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 nice. Chat logo, nice. So you're on UJSL. All right. So this is a 15-minute time frame of UJSL, and just going by what has happened here. First of all, we need to trace the origin of these trades that is going on. So for starters, this is a break of structure to the upside, which makes this low, everything from here, a protected low. All right, this is the low that caused the break of structure. All right, so everything from here to here will be considered a place you expect a retracement from. All right, anything down, so it seems like the market has opened good. All right, so anything into this area is where you expect a retracement from for a continuation. And if you zoom out, you see that the market has been consolidating upwards. All right, even though it seems like it's consolidating sideways, it has been consolidating upwards. So you can see that there's a break of this structure, which explains why this low was respected, right? So this one was respected, and the same thing is playing out again. The same thing is playing out again from here. There was kind of like an internal change of character, whatever you want to call it, but you can see that it came back to this liquidity before going up. All right, so this one was respected, and the market is pushing from there. So honestly, I wish there was a different way or a different thing to tell you. The only thing that can save you right now is if this high, since there's an internal break of structure, all right, since there's an internal break of structure, there is a high chance that this one might decide to just keep going down from there. All right, so if this high is able to push the market down for you, good, but there is a very high chance that the market is just going to keep going upwards. I won't lie. So um I don't know. I don't know. If you are not in too much loss, you might reduce some. Consolidating market. A consolidating market is a market that is not going in any direction or is moving in a sluggish manner. All right. So for example, look, if I take out this drawing tool, if the market is going in a zigzag manner, it's not going in any direction, all right, it's just going up and down, you say it is stuck in a consolidation. But this is not the only time you see a consolidating market. You can also see a consolidating market going upwards. All right, you can also see a consolidating, so you can say it is consolidating upward. All right, so that's a consolidating market upward. This is also a consolidating market downward, and it has a lot of story to tell if you pay attention. All right, so this is also a consolidating market downward. Now the difference is this is an expansion or an impulsive movement. This is a consolidative movement. You can see impulsive because it just moved out of where it wants to move out from, and it never looked back. It just went straight. This one too can be seen as an impulsive movement. This one that broke the market to the downside can be seen as an impulsive movement. Now what story does that tell you as a trader? Every time you see a market consolidating towards one direction, there is a high chance that if there is any OB in that area, and let me use this as an example, if I zoom into this zone, all right, look, if I zoom into this zone, now you will see that this low, after breaking that structure to the upside, have every right to be respected if the market wants to respect it. All right, now what did that tell you? And the reason why I said that is because you can see there is this internal break of structure here. So like it or not, whether it is in the internal or what the fuck, so like this or not, whether it's an internal structure or not, if the market wants to go up from here, the fact that it broke this structure means this low is protected with respect to this high, right? Now a second confirmation for you to take this trade will be this style of movement. You can see how the market is consolidating downward, like it's like it's being rejected at every turn, and you can see that the moment it touched that low, what do you see? It expanded upward, or there was an impulsive movement upwards from that zone. So anytime you see a consolidating movement towards one area, there is a high chance that the market is about to turn from there. And I'll give you an example on this BTC. You can see that it was consolidating upwards, and then because there is a break of structure here, you use any other thing that is held inside as liquidity, and the moment the market tapped into that area, you see that the market will want to go down. Same thing with Ethereum, and you can go and backtest this on all of your trades, like on all of your pairs and all that. Anytime you see a consolidation, there is a high chance that the market is going the opposite way. Look, consolidative, even though it looks expansive, in compared to this one, this is a consolidation. All right, consolidating upward. It doesn't mean that it's stuck in one range, but the body language of the movement is what matters. All right, so I hope that explains it. Unlimited. So that's what it means, or that is what I mean by consolidative and all that. All right, so I took some partials when the market was up here. Let me see if I can put add source. Can you come up? You need to ask a question. All right. Send a request. Let's see. Send a. All right. All right. All right. Send a request. Let's see. All right, so for those of you who I now I think this trade is cooking very very well. So I took some partials right at this top because it has just showed like a third change of character at that zone there. So now I'm waiting for it to pull back into somewhere around the 50% of this one. So I'm waiting for this to pull back into like the 50% of this one, preferably around this area, and then I'll re-enter. It might not happen now because there was no liquidity generated. Um, how do I even multi-guests? Multi-guests. Um, okay, okay, okay. Request, accept. All right. Yo, hold on. Oh, yes, speaker. What's it? Give me a second. Let me connect my headphone. Give me a second. Let me connect my headphone. Okay. And then music. All right. Let's see. Give me a second. I'm coming. Just trying to fix my headphone. Speaker, headphone. All right. All right. So, hello. Yeah, 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 I can hear you now. What's up, man? Long time, long time, long time. Yeah, sorry about that. You're just what? Okay. All right. Yeah. All right. Yeah. Mm-hmm. All right. Hold on. Let me switch to. Yeah. Hold on. Let me switch to Ethereum so that we can, both be going hand to hand. All right. Mm-hmm. Yeah. This one. Mm. Mm. This place. Yeah. Mm. Okay. Mm. 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 All right. Yeah, yeah, I understand you. I understand you. I was just waiting for you to be able to, express yourself and tell me exactly what is going on with you. All right. So, from what I've understand so far, you have two problems. The first one is how can you gain enough assurance on your trade so that you will not be afraid to take a trade? Because it's one thing to do an analysis, and then it's another thing to have the balls to take the trade. All right. Can you hear me? All right, cool. And then the second thing is how do I identify internal liquidities and highs that are not going to be respected? Because if you look at the chart, someone could be here and call this a break of structure, which then will mean that you expect a sell from here. All right, somewhere around here, and you can see clearly that the market reacted to it, gave a false hope, but ultimately decided to go up. All right, the same thing for me. The reason why I wasn't interested in this buy, because there were some people in my Telegram group channel that actually went in on this buy. Actually, I think it was on BTC, because most people don't trade Ethereum these days. So I think someone in my group saw this and was like, he's buying from here. But for some reason, I said I was waiting for this area to come. Now, does that make that person who bought here wrong? Because if you look at it, he bought it here and he's looking to, take it maybe above this one or maybe somewhere around here, which would definitely give him like a 1 to 3 or even a 1 to 2, and that makes it like a good trade. All right, but the problem is, when you are taking a trade, you first of all need to, ask yourself, what trade am I taking? All right, where am I taking the trade from? All right, now listen, the way I go about it, and most of the people who have been with us from the beginning will attest to this, is I often relate trading to my everyday life. Okay, like what I do on a daily basis. The best way to understand, all right, the best way to understand what you're doing is if only you can, like, relate. Sorry, who is hitting the mic? Is disturbing me in my ears? Yeah, yeah. All right. So that you can the only way that you can actually trade with confidence is when you can relate yourself with the trade. And let me give you an example of something to use. Okay, so let's say, for example, you relate this market to like a driver. I've always said this, that the market is the driver. You as a trader, you are just a passenger, right? This is me trying to form an example for you now, all right? So pay attention. Now, just imagine yourself as a bus driver who is always shuttling from here to Lagos every morning or maybe 2 times a week as a bus driver. 18-seater bus, all right? We all know how expensive fuel is right now in Nigeria, right? And you are in that business to make profit as a bus driver, right? Now, just imagine you come to the park in the morning and you are only able to get 8 people in your bus. Are you going to move with 8 people inside an 18-seater bus? No, definitely, because that's not profitable anymore. It's not even up to the amount of fuel that you need inside your car, right? So you have two options at this point. It's either you transfer the passengers to another driver, or move around, with hopes of getting more passengers. But you're definitely not just going to move from the park and straight start going to Lagos, because it's not going to help you. Now see the market as a driver, and for the market to move just like a driver, it needs liquidity, i.e. passengers like me and you. Now, all right, so you are opening your position with the intention of making profit, but the market as the driver is moving with the intention of also making profit. Unfortunately for you, you as a passenger, your money is the liquidity that moves the market. You think? All right, so as the driver, the market's goal is to take every last passenger, i.e. your stop loss. You dey get me? So once you don't chop your stop loss, you don't chop everybody, and let's say by the time it got to this level, okay. So let me start relating this story now to the chart. So the market is planning to go to Lagos. That is from Abuja. Call this whole place Abuja now, right? It's planning to go to Lagos from Abuja. All right. Lagos is all the way up there. All right. But now it got to this level. Let's say it started moving from here. So this is the goal, right? Look for the trend that the market is in. And how do you identify the trend of the market? First of all, what structure has been broken? Here you can see there is a break of structure to the upside here on this time frame, and this is just me staying on the 15-minute time frame right now. Okay, so there's a break of structure to this upside, which means Lagos is up here. Pay attention, I'm just using that as an example and I'm relating it to this chart. Okay, so which means Lagos is up there. But at some point when the market got here, he discovered he only had 8 passengers in his car, and by the maths, if he decides to go to Lagos all the way up there with 8 passenger, he's going to run at a loss. All right. So what is he going to do? Ideally, you expect it to come back to come and get more passengers, liquidity. Whether you like it or not, you are the passenger. For you, it's liquidity to the market. So it's coming because there is no more fuel to go to Lagos here. So, but if you decide to come down, this is liquidity number one or passenger number one. Number two, number three. You are seeing all these things that I'm drawing right now, right? So this one, someone who is here saw this one as a break of structure, and he probably would have drawn a very fancy bus here waiting for the market to retrace into it, especially those who are trading on the 1 minute time frame now, right? And it's not like they are wrong, oh, they are right. It's just unfortunate that there are some points where the market has another objective in mind. All right. So if you wanted to remain in an uptrend on the 1 minute time frame, it should have respected this high. All right, and kept going. And this is what I mean. So pull back into this and then continuation to the upside. But then it violated it. Now, after a violation, what do you now think? Oh, that means that the market does not have enough passenger, i.e., liquidity. Where are liquidity sitting? Liquidity number two, liquidity number three, liquidity, the last premium liquidity. And this is why SMC will tell you is going to discounted level, a discount, an area where, now the reason why me I choose to always go for like the last liquidity, which is this one, is that oftentimes the market can come to this area, all right, take this liquidity, and he has to do a reassessment, and that's why they call these areas decisional area. So let's say he has 8 passenger here, it took 3 here, it took 4 here, now he has like 12 passenger. At this point he's like, let me check, can I go? That is why you see this break of structure somewhere around here. All right, and that is giving you a sign to enter the market. And you can see when you enter the market, it's not like it didn't give you like a 1 to 2 or a 1 to 1, because you followed all the rules. You need to first of all wait for the market. So let me ask you one more question before I continue with this story here. If a car is coming to your bus park, are you going to jump into the car as a passenger when the car is moving at 100 km/h, or you wait for it to slow down and come to a stop, then open the door for you so that you can get in? Which one is safer? So let's say you are standing at an under bridge, you are waiting for this yellow cars to come and pick you. Are you going to just jump inside the car when the car is moving very very fast, or you will wait for it to stop so that you can enter safely? Exactly. Now, you now as the passenger, right? That is your duty, because there are two things that you need to think about here. There are two lessons to learn here. So first of all, we all have this stereotype where if you want to, you are standing on the roadside, you are about to enter along. If you see a car that is empty, you already know that that car is going to waste your time if you enter. So sometimes you just tell them, no driver, I'm not ready yet, go. It's a lie. It's simply because you know that if you enter that car is going to waste your time. It's either you're going to wait for other passengers to get in before it moves, and that is going to waste your time. Another one is the heat. You'll be staying inside that car. Sometimes they might even waste your time for like 30 minutes, and you are inside the heat and everything. So you don't want to enter when the condition is not favoring you. The same thing for the forex market. As the passenger, you don't want to enter here when there is a high chance that it's going to either waste your time or the heat is just going to burn you up. And again, let's just imagine, what city are you? Where are you? Lagos, right? So let's imagine that you want to go to Aja from Ikorodu. I think Ikorodu is closer to Aja Island than Obalinde. Which one is closer? Oh, okay, Obalinde is closer. So just imagine you are at Obalinde, you want to go to Aja. You enter a car and the driver just tell you, Omo, let me know vessel, passenger no dey here. So make I go Ikorodu first, go park passenger, then come move pass Obalinde, go Aja. Wetin you go tell yourself? You go tell yourself, say, Omo, this one go waste my time, e go stress me, this one. So you go drop from inside the car, abi? So that is, just see that as this example here. You saw a car, right? It gave you a sign that aja. This is what they call those people where they shout agboro, they shout aja, and aja is all the way here. All right. So you now saw that okay, this is aja, and you entered the bus here when the bus opened the car, right? You entered the bus here hoping to go to aja. Give me a second. All right. Control Z. Now, so you enter this bus here hoping to go to aja, but somehow because there's not many passengers here, your driver decide to tell you omo na aja I dey go but I go need go ikorodu first, which ikorodu is all the way here, and then before I go to aja, which means that you are inside this bus now, you are going to be stuck in this place until the market get all the way to this low, all right, before going back to this up. Now you have to decide as the passenger driver, if that is the case, just drop me me at the hurry, and that is why you close this trade very prematurely. It wasn't as if that this trade is wrong. It is simply because this trade is just going to waste your time. And you can see that eventually it went below here. And the fact that it went below here is now telling you that are you sure this driver is even ready to go to Aja? Because if you are ready to go to Aja, there is no point when after you have told everybody that Aja, Aja here, when you are still at Obalende, you started shouting Aja. So why are you now going back to this area? It's now telling you that maybe this is where this market is going to Obalende before Aja. Sorry, Ikorodu before Aja. You get the point now, but so all these things, if you relate it to the chart, the reason why I'm explaining with these simple languages is just so when you see it, you will know it. For example, if I'm looking for a buy here and I see a break of structure to the downside, this is simply telling me, bro, this market is not ready for a buy yet. There is still up Ikorodu bus park here that maybe the driver's car is not yet full. He might be attracted to Ikorodu bus park. So there are two reasons why the market will be moving in one direction from this story that we have just dissect. It is either the liquidity that it has taken is not yet enough. Remember, what controls the market is supply and demand, and those that hold the biggest addition to the market are the institutions. The institutions are the one that open big positions, right? They open big position, and institution will not let the market move in your direction unless it is able to mitigate its own position. So when you see something like this, a drop like this, me and you as retail traders, we cannot move the market like this. All right, it is only an institution or a fundamental activity that can move the market like this. All right, or move the market like this. So, and that is why they say that any low that is able to break a structure should be respected or should be regarded as a protected or a strong low. So the reason why we are even looking for a buy in the first place is because there is an intention that the market is about to go up. But for it to go up, the institutions that were able to open a big position that was able to push the market to go and break this structure needs to mitigate their losing position. Remember, institutions, they don't open trades with stop loss. If they want to buy 9 billion, they will first of all open a sell for, let's say, 500. Like this thing now, this thing that you are seeing, institution will open a sell, or sorry, a sell position for 500 million just to push the market down to where they want to buy from. So let's say institution want to buy 9 billion. Unfortunately, the market cannot supply 9 billion bonds for them, so they will just drive the market down, taking all this liquidity to accumulate their 9 billion. And once they are done and they feel like, okay, now we can buy, that is when you see them buying the market, and you now see the market rushing. That is the reason why anytime you see a market consolidating towards one direction, there is a very high chance that institutions are just driving it with low fund to take a bigger buy. Look, that's the example. Consolidated downward, boom, right? Consolidated upward, boom, for a sell. Anytime you see consolidation in one direction, expect an expansion in the opposite direction. All right, you can see it in many places. All right, look, consolidated upward, expanded downward, consolidated upward, right, expanded downward, and that is always followed by the trend. You will notice that in a trend, the retracements are always consolidative, but the expansion is always impulsive. All right, so if I am going to go, like in a downtrend, if I'm going down, you notice that anytime that is going back up or is retracing back up, it is always noisy. It is always, this very plenty noise. The moment it gets to where it's retracing to, you see a sharp drop, then it starts again. All right, mitigate a little bit, and then sharp. All right. Now, having known that this type of behavior are what you see every time when you are seeing the market, now it is now left for you to decide when this market is always doing these consolidations, where does it consolidate to? From my own experience, from my own study of the market, I have always noticed that from the first story that I told you about, liquidity driver and all those other things that I gave you before, I've always noticed that the best place for you as a trader to want to get into the market from is the last liquidity, the lowest liquidity, or what other trading strategy will call the discounted zone. Guys, if I'm making sense, please can you help me take these likes to 5k? All right, if you are learning something new from this live section, if I'm adding value to your life, can you help me take the likes to like 5k at least? All right, so now see, the reason why you want to take it from the last liquidity, all right, for me is that you don't want to enter here when there is still a high chance that the market is still going to target the last liquidity. What if you enter here and still, even when you enter inside the car, the passengers are still eight? Maybe you entered when the passenger were seven, so now the passengers are eight. So the driver will be like, make una no vex, so make I still go that Ikorodu abeg, because if I go Aja with this eight passenger, I no go make money. The driver will tell you who her. Now it's now you, it's left for you to decide, are you going to accept that apology and stay inside the car, or in other case, do you have enough balance to cover the drawdown of Obalende to Ikorodu? Is your account going to survive it? If you know your account is not going to survive, or it's not going to like you know be in line with your trading strategy, remember the reason why you enter in the first place was because of the announcement that, hey, from Obalende, I am about to go to what is it called, Aja. But then the driver is not telling you that, but before I go to Aja, I go first need go Ikorodu. Meanwhile, you say, Kai, my stop loss not fit exceed Obalende. So driver, now where we say it dey look like say you go Ikorodu. From the body language of this alone, you can tell already if the market is going to go, because look, now there is a strong drop, which is bad for a retracement. A strong drop is always a signal that the market is in that direction. A retracement to where you want to buy from should be a consolidative or a sluggish movement. So now that you see a strong drop, but this one is a valid low, you took a buy from, but now you are now seeing what you expected. So when the market was coming down, this is what I expected: consolidation. All right, because I expect that when it gets to this low, I'll see a fly back up. But instead, what I see was a fly back down for a mitigation, and now it is consolidating towards the place that is supposed to be expanding to. You can see how it is sluggishly moving. It's not moving fast. All right, that is a sign to tell you that the market might have another target in mind before going to that place that is going to. So with this body language alone, if you are in this trade, you would already have set this trade to break even. All right, because there's no point. And a lot of people would now see all this one and they say, and this is how the market, like induce people to get into the market. Now you're in this trade, you feel like you're in a very good trade, and your devilish double, the mind where they always dey inside us, would now be telling you that, bro, this trade is definitely going to adjust. Meanwhile, the body language of the market is telling you that, I know sure say I don't get the enough passenger to go this agile. You be like, I go need go over Linje. How do I know that it will retrace from here? Breaking this structure now, this internal structure, is a sign that this market might go. Which now means that, again, if I am going to relate that same story back that I told you about earlier, which now make this one the liquidity that can be used to fuel this movement back to Oberlindo. So instead, the driver will just be like, okay, I don't fake this motherfuckers, I don't collect all their SM. So make I just retrace back like say I did go up. Other people will start buying here, and I know a lot of people that bought BTC when BTC was here. They start buying here, stop loss is right here. Guess what? When the market now retraced back into this area, they failed to pay attention to the body language of how the market was coming back at them. All right. So if the market really wants to go in your favor, what it does is a sharp movement from that area. You see something like this. I mean, it's not going to go straight, but it's going to be more like this type of behavior or this type of behavior. But when you start seeing this type of noisy behavior going back to an area that just broke structure, then there is a high chance that this market is going to drop from that zone to the next liquidity that is available. And probably if the market is still very strong and is still selling bearishly, it could even give you like a sign. It's always going to give you a sign. It's called inducement, where you feel like, oh, you're about to miss out, or if you don't enter now, this market is like, this kind of thing will make you feel like you have already missed out on this buy. So you want to enter at every opportunity that you get, forgetting all the other things that we have talked about. So again, this is just my own way of explaining the market in a way that I believe will help you to understand which trades are, like, you should put, like, if I do all this analysis and the trade goes against me, I don't really care. Plus, if you add this one now to your risk management, whereby you are not risking too much, you are not over leveraging your account, knowing fully well that one trade is not all that you need. If I have all these things, all I just need to do is, if I lose one trade, I lose another one, I lose another one. All I need is one or two trades, because I'm targeting a 1 to 3. Okay, I've been talking too much. Fuck. Now, see, so now don't make me lose money. See the 0.5 that I expected this thing to pull back into. Now it pulled back and I wasn't there to take the second trade. That's bad. But anyways, this trade is still active. All right. So again, that same thing, let me just do a quick recap for you. First of all, you want to see a break of structure. Once there is a break of structure or a change of character, depending on where you are trading it from, once there is a break of structure, your goal should be a retracement to any liquidity, like the last liquidity that you can find or the last reasonable liquidity that you can find. So now, the moment there is this break of structure to the upside, anything that is contained within, from here, this low, to this high, you see this ruler, this line where I draw now, anything that is contained inside becomes liquidity when the market is retracing. So instead of looking at this place, all right, so for here to here, this is only valid with respect to this break of structure. This inside is only valid with respect to this break of structure. Now that you are coming from the external break of, sorry, my bad. Now that you are coming from the external break of this structure, you expect that the last liquidity that is contained within this zone should be taken for you to be safe. It's not like it cannot retrace back from here or continue going up from this area. But the fact is, since it is coming from the outside with respect to everything that is inside here, expect that this one will be used as liquidity. And ultimately, if you can go to like a lower time frame, maybe you see something else like I did, because I went to the 1 minute time frame when the market was coming down here. I went to the 1 minute time frame, and then I saw this I saw that there is this final liquidity sitting down here. All right, but sometimes if you are looking for that last liquidity and all that, you might miss out on a lot of trades. So instead of using this low, I just use this one as other block, and I covered everything. So the moment the market got into that zone, I entered a buy from here. The confirmation for me was, you see this little break of structure and retracement on this 1 minute, that was enough for me to know that this market is about to go up. This would have been the second one, and you can see again that the retracement came below any liquidity that is standing inside. So again, with this explanation, I don't want it to be too much, but I needed to be very, very like intense with it, because that's how I understand structure and where to target. It's going to help you to know where to target, where is necessary for, or where is good enough for you to take a trade from. So is that clear? The, all right, all right. You see that one? You see this one that you're talking about now? It brings us to the second part of the story. I have told you where liquidity, or where to expect liquidity to be in the market. But just knowing how to analyze the market is not all that you need to be a successful trader. The biggest part of this journey is what we call psychology. All right. The biggest part of this issue is what we call psychology. And how did that play out here? Now, let me also bring you back to a story, or let me make a story up for you to understand. Now, imagine yourself. Mute your mic first, eh? Okay. So now imagine yourself, right? Imagine yourself as, I don't know what stage of life that you are right now, but someone out there will see you drinking what is it called? Ragolis pure water. How they tell they call it? Table water. How they tell they call them? That one where they do inside Ragolis. I be I will tell you you are wasting money. You know that, right? Someone might see you drinking a table water bottle. Thank you, bottle water. Someone might see you drinking bottle water and be like, oh more this bros the shit though. See waiting they drink. When pure water dey, me I no go fit drink am. Meanwhile, to you, to drink table water might just be nothing. Or you can be, let's say you might be in a restaurant and you just see somebody begging and you felt compassionate for him and you just give him something like 2k to go and eat. Meanwhile, you have like 10k or 100k in your account. It doesn't make much to you, but to that person, you may have saved a life because that's like heaven and earth to him. Now, the reason why you are able to give out 2k from your own 100k and not feel a pain is because 2k to you is not really much because you have like 100k. So you can out of compassion give out 2k. Again, the same thing goes for clothes. The reason why you can buy a shirt for 5k, 10k, or even 100, you see some people buying very expensive clothes, and all of us wey broke, we go dey tell them say they no know wetin dem dey use their money to. Or you go see Burna Boy buy car of very expensive amount, and you're like, that guy just dey waste money. Bro, you know dey waste money, na you broke. Your current level of wealth is, it has not gotten to the level where you can do such things out of ease, like easily. That's why you are seeing it as, like vanity. When you get there, the only way you can judge a person like that is once you don't wear that, like you don't get that kind of money and you don't do the same thing. That's the only time you can call somebody like that, waste or something. Why am I telling you this thing? If you want to take a trade, and let's say you have 100k, but this 100k is your last amount, and then you now go and open a trade that is going to take your account, or that might wipe your account, there is a high chance that that trade is not going to go well, even though your analysis is correct. You know why? It's either you close it at 1 to 1, or the moment the trade draw down against you for 20k, you don't close them. Why? Because you no calculate your risk at first. You just enter the trade, you no care. You feel like say you fit chest am. But the moment you see that red, na there your main psychology go start to reset. So you notice that at first you felt like you are ready to risk everything. The moment the trade was in drawdown of 20k, you start saying maybe it's because this trade is wrong. Let me close it so that I'll see what will happen. You close it, you see that the market just reverse a little bit against in your favor. You're like, damn, na mistake. Make I open them again. Make I open them again. You open them, the market decides to go down again. It will keep playing with you like that until you are gone. The reason for that is because you are not using the right risk. But just imagine if you came to the market and you're like, 100k, man. I mean, it's my last card, but 20k now something where we say I feel easily just, you know, I feel easily risk. Let me risk 20k with this my setup. I have done my best. I have made sure I covered everything. I have made sure I am trading from the right place. Like you have done everything that we'll talk in the first part of this your question, and now you have a trade and you are ready to take the trade. Now at this point you just tell yourself, okay, let me risk 20k. Now I kid you not, if you risk 20,000 here, even though that 20,000 goes into a loss, you will not be bothered because one, you have assurance on your trades because you did your due diligence. You did everything that you were supposed to do as a trader. You waited for, you were patient. You waited for the trade to come back to you. You did all that, so you are not bothered. And the second one is now you are risking an amount that you can risk 5 times out of the current balance that you have. So if this one takes a loss, no problem. If it gives me another change of character, I take that one again. If I am able to just take like out of 3 trades I manage to make 1 win, it means my account is still at break even, which means I have 5 chances to lose. Now it is now left for you to be able to, streamline your strategy down to the level where you are not afraid to take maybe even three losses in a row, because now you know that you have 100K, you can risk 20, 20, 20. You have also, did so well on your strategy. You have managed to, study your strategy so well that you can vouch that in five trades at least you have two wins. Now the rest is left to luck. That okay, fine, oh, you have done all you want to do, make the market not just go, make Trump not just go tweet against you, or make fundamentals not just go do you dirty, just like what we did, what I showed you on this man in Egypt. Sometimes your analysis can be very, very correct. Fundamental situations are just not going to help you. You get? So that second question you asked is all about your psychology, and the best way for you to maintain your psychology is to risk what you can be able to lose, what you can afford to stomach as a trader. All right, so that's my answer to it. You're welcome. All right, all right, all right, all right. So you're welcome, you're welcome, you're welcome. And the thing is, I don't even know. I am yet to decide which one I have to do right now, because if I go live on my mobile phone, you guys remember when I used to hold my phone and you will not see the chat clearly, but you see a lot of engagement. You see like 300 people, 250 people on my live section. All right. I don't know how the algorithm of TikTok is doing it, but if I come live here on TikTok Studio where I can present my screen like this to you, I don't get a lot of engagement. All right, it is affecting me as a creator, that is in terms of content creation right now. But now I have to decide, should I sacrifice my own likes and all that? And another problem is, if I come live on TikTok Studio, I'm always getting warning. In fact, I have been warned already on this live section. They are telling me that I'm copying another person's content. Which person, I don't know. I don't i don't even know what I'm doing wrong. So that is the in fact, sometimes last 2 weeks they banned my account for like 2 weeks. That's the reason why you guys did not see me at all on live, and I did not even care to explain, because I was tired of explaining to people in my Telegram channel. It was just as if I was not serious with what I was doing and all that. It affected me a lot. So, but I'll just keep doing it. I'll just keep doing it. If I'm able to fix everything, I might switch back to the phone, because again, you can see the engagement. I am right here teaching right now, but it's only five people, and these five people say, I'm sure they were not here from the beginning. Some people are just joining now and all that. So I definitely will switch back to the phone, but I'm just trying to see. Let me just hold this one for a few days to see if it's going to improve. That's why I am here right now. So for now, just anytime you know that you are available on TikTok, you can just check on my name to see if I'm live. And another thing again, just like you said, if I come live, normally they will announce my presence to all my followers, right? And then they will even, like, promote my live to other people. But now, if I am on TikTok Studio, they don't do that. They will not announce. They want me to pay money to promote my live section. So you see, I don't know. I don't know. For me, it's not favoring me at all. Yeah, but anyhow, it is. We are going to get to the bottom of it. It's fine. All right, all right, all right. You're welcome. You're welcome, bro. Yes, sir. Remy links finally. Yeah, yeah. You're very, 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 very welcome. Yeah, yeah. I started coming live like 2 months ago. Yeah, yeah. I really appreciate that, man. Thank you for being part of the story. Yeah. Okay, what time frame are you trading on? Mm. All right, all right. So there's one thing, yeah, yeah, I hear you. Mm, mm, yeah. Mm, 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 mm. All right. So I hear you, and if you notice, and I'm not sure if you're in the Telegram channel, I think you are there, but you guys, you notice how? Oh, okay, okay. So if you were in the Telegram channel, you notice that while I was away or while I was not very active on my live sections, I was taking some trades, and because of what I need, you guys should know that everybody, regardless of how experienced you are also we have detected inactive. See they worry this one. These people don't start with this their rubbish. Give me a minute. Um, see they worry these people now. Try again. Try be inactivity. No be me there the talk since. This Telegram, this TikTok people, they have problem. They just have problem. Until I there they talk, they shout since they say inactivity. Anyways, let's continue. Okay. So one thing I noticed based on the question that you asked, you can already see that I've already marked my area where I expect a retracement into for a continuation, right? From here. And the reason for that is, there's a break of structure and all that and everything. You can hear me, right? Hello? All right, all right, all right. So, so now there are two things that you need to understand. If the retracement that was, because what we see as liquidity is the last reaction to what you or the place. Okay, for example, if this market was to continue going up, just like I explained to the other guy, if this market was to continue going up, you expect that it's this area is the protected low. All right, so this is your protected low. You expect that the market to react from it like that, and it should follow the order of the day and just continue going up like that. And you can see that it gave that reaction for a 1 to 1 or even a 1 to 2, somewhere like one to two. All right, and then it broke structure to the downside, confirming that the market is now temporarily, or whatever, I know you want to do the English done. But this thing alone is showing you now that with respect to this structure, since this is coming from an area that was able to break a structure, the fact that it was able to now clear, yeah, the fact that it was now able to clear this liquidity, use this one as liquidity in your POI. Remember, any box like this is a POI. So it cleared liquidity in your POI, strong liquidity because this 15-minute time frame, was able to break structure to the downside. And why is it a break of structure to the downside? Because this one that you would expect that is a break, a protected low has now been violated. All right. So it was dismissed, which means that the market temporarily is now in a downtrend. Now, if you want to go with this one, where you would expect the market to return to is liquidity, just like we have always traded. So the best place to expect the market to return from is liquidity, and this is where we do a direct entry. Direct entry in the sense that I can now give like a limit order. If I am not active on the chart, I can set my limit here because I know that if it goes above this one, at least this one should be respected. I'll just put my stop loss above the main high. So if this one get violated at this point, it's not my fault. But then again, remember, where is it coming from? All right, before you conclude on that one reason alone, look at where this market is reacting to. Ever since the market broke structure to the upside here, it has not retraced back into this zone. So ideally, what that means now is that even this low is a puppet low. It's not really a strong low, although it is able to break structure to the upside. That is what is making it a strong low. But the market should have at least retraced back into this one first. It should have actualized something. The only thing that makes this one a strong one now is the fact that if you look at it, it's like it took some liquidity internally before breaking structure. That is the only reason why we are going to be trading this zone. We, that's the only reason why we're going to be trading this zone when the market return into it. Now the question is, sometimes it will just come into this other block, this resistance level here, and start going down, and that is the problem. Because it's not every time that the market retraces deep into that zone. For that reason, what me I used to do is, if I am on the 15-minute time frame and this is like a fresh break, if the market is coming from all the, like, let's say the market is coming from down here to this one, I will definitely want it to get into this zone. But let's say it's a direct break and retest, like this one, it broke a retest, then I will just take it as direct entry, because there is really nothing to fight about it. But if the market was coming from a series of break of structure, like there were more break of structures, like after doing uh, this one, he did another break of structure, and now he's coming back. That is when you'll be looking for a change of character like this. But when you are trading with respect of change of character, all right, there is a high chance that the market might not return back to the final liquidity. And that's the reason why I told you that all you need to do at that point is pull out your Fibonacci level, draw your fib, just like I did here on this pair, this one that you are seeing. See, pull out the Fibonacci, draw your 50%. Now at that 50%, where did you say? At this 50% now, you can see that the 50% is also aligned with the place you are, that is always causing problem. All right, this place is always causing problem, because sometimes the market will just pull back into it like this. It's just pull back, it will come very close to your entry, pull back into here, and then just go back. So for me, what I'll just do is, since I'm not sure, and this one also did a pullback, because if I go to the 15-minute, the 5-minute time frame, whether you like it or not, there is this little liquidity that was cleared behind this zone before going back. You see how it cleared this liquidity before pulling to this upside. So since that one did that, there's every chance that this market might respect this zone. So instead of using this area and missing out, I'll bring my own here with this stop loss. So I will have a wider stop loss. My target will be a little bit smaller, so 1 to 3, maybe I was supposed to get 1 to 5. I'll now sacrifice this little gap just so I can get tapped in, because regardless, if the market was to go above this area, I'll be in this trade anyways. So that is one thing I have noticed so far, and that is how I now approach it. Instead of just putting it there, I'll just put it at that 50% level of that break of structure. Now another problem that we have is, what if the market did not decide to come back now, and it does something like this, it still go further before coming? That is a second break of structure, which now means that if the market is coming back, definitely it should go back to the first liquidity, because you now have two liquidity inside of it. So at this point, I don't want to risk it. What if I risk it and it decide to go all the way up there? All right, so these are, and if you are not sure of how to do it, you can wait for it to react to this area and give you a candle that looks like this on the 5-minute, like an engulfing candle. So let's see, when the market pull back into this area, it gives me this kind of wick and an engulfing. I'll just risk it for a 1 to 3. I'm not risking too much of my account, so I should not be afraid. So that is how I tackle issues like that, bro. You guys are still with me, right? Just like I'm talking to myself since. Oh, okay, you were muted, I guess. You're welcome, man. You're welcome. Just see, bro. Let me tell you something. Let me tell you something. One of the things that made us took so long to become profitable, and I am talking with my own experience, bro. I've been 6 to 7 years trading. I started trading, or I started making profits in the forex market when Happy Forex was still very, very, those early ages where he was just getting started. So that's to tell you that I actually got in the trend of trading for like very, very early. But the differentiating factor is that I didn't take it that serious. And even though I took it serious, I guess my commitment to it was not enough. Forex is something that you should not be afraid to take a loss. You should not be afraid to take a failure. Because it is even from that failing experience that you are going to learn the most. All right. So before, if I am taking a trade, I want to get something reasonable. But Over the time, after wasting a series of years in my life, I now noticed that this shit is not helping me. But the only one I saw that was helping me was my consistency. So I might not be making as much, but at least I am always surviving. Always. In the first, like, I will survive and get back. That was how I started getting it. So never be afraid to take a loss. If you do your analysis, first thing you have to ask yourself is, did I study? Am I trading because I feel like I'm lucky, or I am trading because I feel like I have studied this skill? This is what my strategy tells me to do. So I will just do it. I will now take the risks like a man. Don't get me wrong. There is no trading strategy that is going to give you 100% assurance of winning. But what differentiates you is, are you taking a calculated risk? Are you taking a risk with a plan? You get the point. So now, if you already studied, if you have taken your time to backtest, you have, see, all we are doing in the forex market as technical analysts is pattern recognition. Everything that I have been showing you since is how to recognize various patterns. For me, I have seen this pattern that I just discussed to you. I've seen it happen a lot of time. You guys can go to the chart of Ethereum right now, and you see that I have a lot of trades on this pair right now, right? It will shock you that I have not traded this pair in a long time. I have just been backtesting, and I just want to make sure to see that anytime that I see a trade, what I usually see as a trade happens. You can see this thing: change of character, retracement to the last liquidity, boom. Change of character, retracement to the last this thing, boom. Change of character, retracement to the last one, boom. Like, change of character, retracement, boom. You have seen it now that it happens a lot of times. So this pattern, you should be registering it in your head. All right, so that when next you now see it, you can have, like, I've seen this thing happen a lot of times. So let's just give it like, out of 10 times I've seen it happen 4 times. My edge, having 1 to 3 win on any trade that I take, tells me that if I can be able to win 4 out of 10, but I am a profitable trader. Yes, because if I win 4 trades of 1 to 3 out of 10, I am a profitable trader because I'm targeting 1 to 3. So I am a profitable trader. And since I am very, very, very careful with the selection of my trade, I shouldn't even lose like 4. Sorry, I shouldn't even lose 6 in most cases, right? I shouldn't lose, but I just want to, prepare for the worst. Let's say I only manage to make 4 trades in a trade. Can I survive this forex market? What if it's 3? If I win 3 trades with 1 to 3 RR in the forex market, I win 3 trades with 1 to 3 RR, I'm still at 9. Let's say I'm using $1 out of $10 for each trade. I'm still at $9 profit. Sorry, $9. I still got back $9, and I risk $10. So my account should still be sitting at $9. I mean, it is not a good performance, but it's also not like a bad performance either. I have not blown my account. Does that make sense? So this trading, like this strategy or this edge that I have alone, just by staying at break even, it seems like I'm still doing okay. Now flip. Now I have talked about the worst case scenario. Say I only made 3 wins, which means I lost 7, right? And I'm still at $9 instead of 10. All right. Now just imagine that now I make 4 or I make 5 wins just by selecting more premium trades with better confirmation. All of a sudden, I'm now a profitable trader. Now, at that point, all you need is no longer um, which trading strategy to use. All you now need is, how can I multiply my capital? Because if you cannot work with $10, don't get me wrong, if they give you $1,000, you are still going to blow it. Because the moment you have $1,000, the risk that you were taking before, the risks that you were taking before will just all of a sudden triple also, which means you are still doing the same thing. You are still doing the same, literally. So if you were blowing your $10 account with a wrong trading strategy or wrong trading psychology, you are still going to blow that $10,000 account. So that all those people that are deceiving all of you, telling you that you need millions before you can make money in the first market, it is a lie. If you cannot work with $100, trust me, bro to bro, you go still lose that your $1,000 when you they gather all your family inheritance to come trade for the forex market. But if you can be able to consistently trade your $100, even though na break even you dey hit, but with $1, $2, $10 in profit at the end of the week, even though na break even you dey hit, trust me, with that alone you can now be able to scale up. So all of a sudden, instead of 1,000, you are now trading with 10,000, which means that if you make the same, let's say 10% that you made on $100 that was not making sense, because when we have $100, you make $10, you just start thinking, it's not enough, let me trade more to make $20. So you are trying to make 20% of your trading account in one day, and then you lose. You start blaming your trading strategy, a strategy that was able to give you 10, 15% before you lost 20%. You are blaming, you are telling yourself that the strategy is wrong. So who is a fool here, if you notice? Because a strategy that can give you 10% in a day on your account, even though it is obvious you risk way too much, right? But let's just think about it for a moment. Now imagine 10% of $10,000. Imagine 10% of $50,000. So if you can scale up from there and you just jump to profit, now you are making $5K on $50,000 just for 10%. So that is where, see, first of all, you need to condense what you are doing. You need to remove everything that is going to mess with your psychology, like risking too much. It's not going to help you. Like, you are thinking, okay, but I will be making big money. What about the big money that you'll be losing? Are you thinking about that? So instead of thinking about the good case scenario, why not think about the worst case scenario, so that it can help you? If I'm taking it, like you can see, I'm even in a trade now and I'm gisting with you. I'm in this trade. All right, I'm in this trade. I just secured some profit here. I secured some profit here and I'm waiting for it. Now it's even giving me an opportunity to enter. I am about to enter again right now, like this. All right, why am I entering again now like this without fear? Because I mean, I've already secured some profit, and now this, yeah, at this point exactly. So I just entered a new position right now as I'm talking to you. All right, so now I am still trading risk free. Everything stop loss is going to come here now, which means even if I lose what this one has to give me, it's still going to come from the first one that I've already made. Now you can see that I can just go to the other side, to this place, and be doing my thing, and I'm not even worried whether I'm losing the money or not. I Like, there are so many times that these things have happened, bro. Like, so many times. Just pay attention to the structures, pay attention to the patterns. Like, open one chart, go on one time frame. There is no need for you to go to just don't be stuck on the lower time frame chart, like 5 minutes, 1 minute. There's just too many information going on there. But let's say 1 hour, 30 minutes, depending on the kind of like trading, bro. Another thing that you need to know, trading should be a personality. If you see somebody making millions and trading one particular style, it might not work for you, because you might not have that level of patience or level of endurance that other people have. See everybody mocking that Willis when he posted all that thing that happened recently. Some people entered that trade with Dr. Willis, but they wanted to take their profit the same day. That, but who can hold a trade for 3 months and have no close? You are now taking lessons from him, but you enter a trade today. By the end of this day, let's say the trade is still in $1 profits, you are now complaining. Somebody is entering a trade with 90 pip stop loss on a normal day. Even if you want to trade like that for Willis, I kid you not, there is no way your little account balance will be able to give you anything with his strategy, because I mean, you have 90 pip stop loss. Which loss size you want to use out of your $100 account, or which loss size you want to use out of your $200 account? If you 90 pip stop loss on GDP USD, that is $90 already with 0.1, abi, or 9,000 with $1. 90 pip stop loss, and somebody is taking the same strategy, like the same signal, and since the thing is just not giving him quick profits, he's complaining for a trade that him, your mentor, is about to hold for maybe the next 3 weeks, and he will not even flinch, he will not even think about it. So you can now see that even though he is a good trader, for you and your own personality, he is a bad trader. For you, I'm not talking with respect to him now, with respect to you and how you trade and your personality, his trading style is not going to work for you no matter how hard you try. It is obvious because one, you don't have the capital. Two, you don't even have the mindset to trade like him. You enter the trade, you are expecting profit tomorrow. He entered the trade, he entered the trade today and he is not even thinking that the trade will manifest in the next 3 weeks. He's chilling, he's just balling, he's just going around on one trade. But you, inside that same 3 months, you don't open like 150 trades. So before his trade will even mash up, you don't lose your account. So you see why I'm saying that trading also should be a personality. You should first of all check yourself. Do I understand, or does this thing relate to? Can I hold? If you know that you can only hold trade for as long as 1 hour, look for a strategy that can only like that should manifest itself in 1 hour, or at least give put you in a good position in 1 hour. If you're trading anything else, my brother, you're in the wrong business. It don't go work for you. And take it from me, now my experience, now in the talk am. All right. Yeah. Yeah. You're welcome. You're welcome, my bro. You're welcome. All right. Let's see what's going on here. So, guys, you guys, all of you are welcome. Unfortunately, some of you are just seeing me for the first time, and yes, I am going to be ending this live section soon, and I will be coming back on live at 8 a.m. or 9 a.m. depending on when God wake me up from bed. You get the point now. So, but regardless, just stick around. We are back fully, like I promised you guys before. We are back fully. It's either going to be my phone or anything, but any one that I finally decide to use, because honestly, I don't know if I can cope with having only 6 people watching me when I am used to seeing 250 people, and I'm used to seeing all those gifts and all those love and everything. So I can't promise that I'm going to keep presenting with this. This one is very, very good. I would have loved to be presenting like this because I mean everybody can see what I'm talking about the way I want them to see it. But unfortunately, it seems like I'm going to have to revert back to the phone because I've tried so many times just to like see if I can do it better. But yeah, they pay me. So I have done what I came here to do tonight. I need to sleep now. I just came here to do my top-down analysis of some pairs. Explain if I have anybody to explain to. Again, for those who are watching BTC, I think if BTC plays back into this area, expect a sell. So if it pulls back into this area, just before I go, if it pulls back into this area, expect a sell. All right, if it pulls back into that zone, expect a sell. But remember, it is coming from this demand zone, which has the power to push the market upwards. So wait for a candlestick confirmation, preferably on the 5 minutes or even on the 15 minute. Make sure that inside this zone you see one candle that should be a selling candle. You will know it. All right, you see one candle that should be a selling candle or with selling pressure. That is when you enter. It doesn't matter if that will make your entry look like this, but then that is where you should enter. But your target should not be beyond this one for now, and the market might not even retrace back at all into this zone before getting to this one. So regardless, anything it does, I think by the time we wake up tomorrow, the market should have given us like a direction of where it wants to go. Okay, so enough said. Hope you guys gain value from it. And if you're just coming, we have talked about a lot of things. I'm going to be cutting some part of this thing. I'm going to be checking some of the most educative parts, and I'm going to be uploading that to the YouTube. Also, we are available. We are live right now on YouTube. You can go to the YouTube page and rewatch this video if you think you need to revisit any of the things that we have talked about. Sorry, my bad. Come on, shut up. Shut up. I want to show you. So we are live on YouTube. You can go and do a replay of what we have just done right now if you want to revisit it later. So you just go back to you go to the channel, and you go to the live trading section. You can see that we are live right now on YouTube. And is there even anybody watching? Because I came live in the night. But anyways, if you go there, you can do a replay. I've made it possible so that you can do a replay. So you can do a replay and then refamiliarize yourself with everything that we have talked about. If that will help you, all right. So again, it's good to have you all. We'll see again tomorrow, and we hope that this week is going to be a prosperous week for all of us all. All right. Oh wow, seems like I entered the trade so early. It's crazy. But anyways, have a nice night. What is your username there? I believe that's what you want to ask. Check the link on my bio. All the link to all my channels, like the Telegram channel, the YouTube channel, the Twitter page where I post my signals and all that. It is under that one link on my bio, so you can click on that link and to take you to a page where you can join all you know um, our channels. Okay, so have a fun night, have a good one, don't overtrade, and see you tomorrow. Okay, thank you so much. Thank you so much, brother. Thank you so much. Thank you so much. Thank you so much. I appreciate you for being here. Also, trust me, I do. Goodbye, YouTube. Thank you so much for watching and for all those.